My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one to make friends, but just trying to make you some money. My job is not just to entertain you, but to educate and teach, so call me at 1-800-743-CBC or tweet me at Jim Cramer. When we get Friday's employment report, yeah, that one from the Labor Department, the one comes out at 8:30, it is going to be so bad that we're going to be debating whether we're in a serious recession or depression. We have pockets, though, of strength, like technology and healthcare, but those pockets can't offset a very weak backdrop, can they? We saw it again today. The Dow lost 218 points. The S&P 500, it tumbled 0.7%. But the tech-heavy NASDAQ actually had the darn gall to rally 0.51% and was up 1% most of the day. Oh, the indignity. If you make technology that helps businesses cut costs by firing people or having them stay at home, well, then you're doing great. If you make something that people literally can't live without, like medicine, ooh, terrific. But just about everything else is struggling here, hence the staggering number of layoffs. And yes, the big drop in the index I am worried about, or at least a lot of what I'm worried about, which is the S&P 500. It gets worse. If you run a business that's levered only to the U.S. economy and not China's economy, well, now your stock's getting walloped. Over and over this earnings season, we've seen companies report quarters where they had an incredible 2.5 months, and then their business fell off a cliff at the end of March. These companies desperately need the lockdown to end. But even that might not be enough as long as tons of consumers are still worried about getting sick. Rational. Okay, now that the economy is gradually reopening, many investors believe that there will be winners and losers. But crucially, the winners are the same companies that were winning during the lockdown. You know, Alphabet, Facebook, Microsoft, and the like. The ones I love, the ones I tell you every night. I say are fine. I mean, while the list of losers, though, is getting a little longer. Classic example, the consumer staples, Procter, McCormick, yeah, the spice company. Love this stuff. Almost reached for this. Wrong function. And I got to tell you something, those stocks have been winners, but today they got hit as many people are now betting that the economy could come back strong, the so-called V. However, nobody wants to bet on the retailers or the restaurants, the stocks that should benefit the most from a comeback, the so-called V, because social distancing may be too hard for them, okay? I talked about that last night. We had to take out seven tables out of 11 in one of my restaurants. I guess we can just quadruple the price that we ask people to pay. All right, all that stuff's getting hit. But the highest of tech and med tech flyers, the Amazons, Shopify, the Twilios, remember them? Dexcom, PayPal, unstoppable. Or at least they seem so. At the end of the day, this action makes little sense. The staples and the retailers should be moving in opposite directions, and the techs have to have some economic sensitivity, don't they? I mean, a little. Like, doesn't Adobe have companies they retail? You know what I mean? I mean, either we're headed for a brutal recession, or maybe we're not. In other words, somebody's wrong here.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.